Welcome, everyone. Good morning to those who are in Brazil. Good evening to those who are in China. Our topic today is an economic topic, Chinese economy, present trends. And we are honored to have today Professor Huang Zhangkai. Professor Huang Zhangkai is an associate professor of finance at the School of Economics Management of Tsinghua University. He got his PhD from the University of Oxford. Before joining Tsinghua University, Professor Huang taught at Beijing University, Lancaster University, and he is doing research in corporate finance, political economy, and economic development. And he published widely in top academic journals, including the American Economic Review. I'm accompanied today by Cecilia Machado. Cecilia Machado also holds a PhD from Columbia University, not Oxford, but Columbia University. She is the chief economist at BOCOM BBM, the communications bank in Shanghai, here in Brazil, and she's a columnist at Folha de São Paulo. Cecilia is going to start, and she's going to give us the general framework for our debate today. Cecilia, please.
Okay, thank you so much for having me taking part of this debate. It's a pleasure to hear you, Professor Zhangkai, about the Chinese economy, and with the comments also by Ambassador Karamoru. We follow Chinese economy with great interest, especially in the bank where I work, but also for the general audience that is following us, lots of interest in the Chinese economy. And to start this dialogue, I'd like to comment on the stage of the economic recovery that we see throughout the globe in developed and developing economy, and how China compares in these different stages of recovery. So coming out of COVID, the biggest challenges that developed and developing economies are facing is the fight against inflation that has come in the aftermath of very strong monetary and fiscal stimulus. We have been seeing both in Europe, also in the US, tightening of monetary policy that should slow down economic growth. All of this coming with the additional challenge of a normalization process in the economy, with the resumption of normalization in supply chains, production, flow of goods and flows of people, going back to the normal that we had pre-COVID. And interesting, when we look at China is now, we are following very closely the news, opening up after a long period with very tight COVID restrictions, and in a direction that stands in sharp contrast to what we have seen. So because of in response to the restriction, the Chinese economic growth has slowed down. But on the contrary, Chinese has been very responsible fiscal and also in terms of monetary policy. There's quite some room for stimulus and to jumpstart the economy as it opens up from the COVID restrictions. So with this setup, I pass it along to Marcos so that we can talk about more about the Chinese economy.
Professor, let me start with a very general question. How do you see the Chinese economy now?
As we all know, the Chinese economy has been in a very difficult situation in the past 2 years. And part of that difficulty is actually, I would dare to say, self-inflicted. But since as recent as summer, the Chinese government has taken a U-turn in many of its contractionary policies. And recently, you may have noticed that China is reopening up very quickly and at a pace which has taken many observers, including many Chinese, by big surprise. So I think the market consensus and which is also my opinion, is that the Chinese economy is going to have a relatively healthy coming back next year. So next year, China's economy is going to have a relatively easy time, and certainly it's going to be much better than what we are having this year, which is not very comfortable. But in the long run, that depends, a healthy economy depends on meaningful structural reforms, and which we can talk about in more details later. Thank you.
In our previous conversations, you mentioned the fact that the framework for economic policy formulation in China has changed radically in the last few years. Could you make a comment about that?
Well, I think if we are familiar with China's economic reform and economic history, I think you may have probably heard of Deng Xiaoping's famous saying, that is, black cat, white cat, the one who catches the rat is the good cat. And also, he defined China's reform process as the way one crossed the river by by feeding the rocks. So you can see that during China's past 40 years, the Chinese government has conducted its reform policy in a way which is very different from the shock therapy in Eastern European countries and in Russia. So it's a trial and error process. It's a gradual and experimental process. Now, which is very realistic, because there's always a discrepancy between economic theory and economic reality. Now, however, in the recent, especially in the past 5 years, the Chinese government has taken a more centralized way of doing things. For example, you may have heard of this famous slogan of so-called top design. So the Chinese government has changed from an observer of decentralized reforms to a top design, to someone who sits at the top of the pyramid to carry out this top design. So if the reform and if the economic policies are top design, there's going to be a big gap between the policy formation and the information which comes from the bottom. So that's why you see lots of volatilities in China's economy and economic policy in recent years. So I recommend you to a economic uncertainty index piled by some economists at the University of Chicago. So if you look at the section under China, you could see that the economic policy uncertainty in China has risen sharply in the past 5 years. I think the reason for that, in my opinion, is that China has changed from a crossing the river by touching the rock way of doing things to top design. So the top designer, by definition, I think it's not difficult to understand why the top designer will probably be surprised to see what's going on in the reality.
Very good.
Professor Zhangkai, it's a good point that you mentioned about uncertainty, and also I think all our viewers are looking forward to know a little bit more about the COVID policy and how uncertainty might play out looking forward with these new measures that have been announced and the opening up of the economy. And I think it's interesting when you mentioned the uncertainty, because one part of the lift up of the restrictions and how it jumpstarts the economy is on how people feel about going on their business, consuming, increasing mobility. And we have been seeing in different countries that this opening up of the economy brings a very strong short-run stimulus to the economy. So I'd like to hear a little bit about how you see the lift up of the COVID restrictions and how it's gonna affect the economy in face of some possible uncertainties that the population might still be viewing the lift up of these restrictions.
Okay, I think first of all, China has passed the point of no return. So there's no way the government will take another flip-flop in the COVID-19 policies and to choose the harsh lockdowns again. So China is experiencing, every other country has already experienced. So I think at the moment, the atmosphere in China is that people feel both great relief and also, as you can see, you just mentioned, also a little bit of uncertainty. So you have to understand that the Chinese population has been fed by those biased coverage on the side effects and seriousness of the COVID-19 and especially the Omicron. So even after the government has abolished most of the restrictions, I think the initial response of most people is that we are still going to be careful, and that's quite understandable. But I think sooner or later, people will get used to it, and people, especially after when the World Cup is going on, and when people can see that most of the audience is just maskless, I think people will get used to it quickly. And I think that window is going to be very short, given the exponential growth in the infection cases. And I think definitely that's going to we are going to see some very positive effects on consumption and on travel. So if you follow the stock markets recently, you could see that the Chinese stock markets has been has been on a rally for almost 2 weeks, and especially the stocks in the travel industry and in the entertainment industry has been doing exceptionally well. So I think that's going to have a very positive effect on the Chinese economy in the very short run.
Professor, let me follow up on your previous comment about the new model of economic management, top-down, in contrast with the previous model. One of the driving forces of the Chinese economy is investment in infrastructure, isn't it?
Yeah.
Investments in infrastructure depend very much on the action of the local governments, you see?
Yes.
The fact that you have a top-down structure now, does it change the role of infrastructure in growth in China, or it's not like that?
Certainly it has changed the role of infrastructure. So I think it has the role of infrastructure in China has changed in several ways. The first is that after two decades of fast growth in infrastructure investment, the marginal return of investment in infrastructure has already been diminishing. So I think that's one very important sector, because you cannot generate meaningful economic gains by building a bridge in the middle of nowhere. Now, the second reason you just mentioned is that the new top-down approach. So previously, the regional governments, you have, I think, China, probably to the surprise of many people, if you are not familiar with China, is that China has a federal system of fiscal income. So the regional governments are responsible, and they have a lot of room in promoting local economic growth. But as China has been becoming more and more centralized, so I think 2 years ago we had this merge between regional tax and central tax. So China operates like before that. There are a parallel tax collection system. So part of the tax goes directly to the central government, and part of the tax went to the local government. But 2 years ago, these two parallel tracks were merged. So so you could see that the regional governments really they no longer enjoy the fiscal freedom they had 10 or 20 years ago, which means that they are now fiscally constrained, even if they want to promote more infrastructure growth. So I think these are the two reasons why we are going to, I think the role of infrastructure investment is not going to be as important as it was 2 decades ago.
Let me ask you then about the real estate sector. Is it going to be a driving force of growth like in the past, or it's going to be a different reality in the real estate sector?
Well, in the past 2 years, the real estate sector has been a big a dragging force because the central bank issued some very harsh policy targeting at the external debt financing ability of real estate developers. So that ironically effectively constitute as a kind of shock therapy. So the real estate, the entire sector came to a freezing situation no one actually expected. So, but as I said, the Chinese government has been slowly reversing those contractionary policies and has been trying to inject more liquidity into the account of those real estate developers. Now, so far, now their stock price has come back significantly, but we see this very we see this kind of disappointing statistics in the sales of the new houses. So I think if these policies are going to have some real impact, it's going to take several months of time. So so you have to wait until most people have regained their confidence in the economy, and you have to wait until people are more comfortable in traveling, and when the negative impacts of those COVID-19 policies have faded away, then we will see people would have more interest in buying new apartments and new houses. So I think it's going to take time.
Okay, let me talk a little bit about confidence. We have seen recently the central bank providing liquidity to the economy, reducing the reserve requirements of banks, and credit is easily available in China today. But it seems that investors do not feel that much comfortable to invest at this point, despite the availability of resources in the economy. How do you see that? Is this just a consequence of zero COVID policies and it's going to be changed? Or do you think it's a more long-term process in which investors are going to make risk analysis deeper than they used to do in the past, and then there will be a reduction in investments in general?
I think it's a very complicated issue. So as you just mentioned, I agree with you that there are both short-term and long-term factors. So if we look at the short-term factors, certainly this COVID-19 restrictions they are not working to support people's confidence. So naturally, you do not want to invest if you're locked down in your apartment. So what else can you do? So you really need to remove all those restrictions. But there are other more important long-term structural factors. So I think in the past 3 decades, and the Chinese government has been very business-friendly in promoting economic growth, and you can see that many local government officials, they have become friends with businessmen, so they welcome all kinds of entrepreneurs. And that's why we invited Elon Musk. But several things took place in recent years. If you look at the crackdown on our tech industry, if you look at the crackdown on the educational sector, educational companies, so I don't think these policies are going to boost people's confidence. So this is the most important source of uncertainty many businessmen and many entrepreneurs are feeling today. So because the Chinese government is certainly doing something that it tried to avoid to do many years ago. So in order to make people more confident in their investment in China's future, I think the easiest way for the Chinese government to do is to stick to the declaration during the third plenum of the 18th Party Congress back in 2013. That is just to let the market have a decisive role in the allocation of resources. So, but contrary to that bold declaration, we see a sometimes unnecessarily too active role of government in the allocation of resources in many areas. So that is not going to help people's confidence. And I think China is really going to change that.
Professor Zhangkai, let me resume a little bit about the COVID policy and talk a little bit about the short-run drivers of growth and the long-run drivers of growth. I think overall, people are very optimistic about the news on opening up. One concern, aside from uncertainty of people, how they see these new measures, is related to something that we have also been seeing, the rising number of cases. And I would like to hear a little bit from you. How do you think the rising number of cases could conflict or change something in the guidelines of the COVID policy moving forward, given the scenario that we have been seeing a rising number of cases, but also policies that have been aimed to strengthening the health system and to decrease restrictions. following up on that, I think people are very optimistic about the opening up of the Chinese economy, which should bring a spurge of growth in the short run. But there is some concern also that this spurge of growth fades away over time, and how consumption can be sustained as a big driver of the Chinese economy. You did touch upon the housing sector, but I was wondering if you could also talk about some room for the housing sector, not only on new constructions, but also on remodeling and refurbishing, as we know that some of the drivers of the housing growth are likely gone, such as population growth and also urbanization, but there's going to be room in the sector as the economy grows, and also how you see the other drivers for the long run growth of the Chinese economy.
Okay, yeah, thank you very much. But that's a lot of questions. But first of all, the COVID-19 policies, I understand that you are very interested in this, but unfortunately, I'm not a public health expert. So from the perspective of an economist, I would like to say that actually, the Chinese government is more powerful and is able to mobilize more resources, which is unimaginable in other countries. So we have seen that during China's harsh lockdowns. I think we are going to see that again during China's reopening, which means that so I don't think many people are worried that there might be a breakthrough of our health system. But I think with a strong government, if they don't make mistakes, that's largely avoidable. So now, several signs of this. The first is that you could see the media, the government-controlled media, has already taken a U-turn in the way they cover Omicron. So just 1 month ago, so if you turn on the TV and read major newspapers, you could see those experts telling us that, well, it's going to be very severe, and once you have caught Omicron, there are going to be lots of there's going to be this long COVID, which is going to affect you for the rest of your life and these stuff. But then if you turn on the TV or if you open up a major newspaper today, the same experts are telling us a totally different story. Come on, and there's nothing to worry about. It's just a flu, and it's a mild flu. And in most cases, you just need you just need some painkiller and drink more water. So you should not underestimate the ability of the Chinese government to control people's attitude towards Omicron. So the quick answer to your question is that I think China will probably avoid the chaos and the panic during the reopening process. And your second question is related to the housing market. So honestly, I don't think the Chinese government has reached a consensus within the government officials about how they are going to do with housing. So on one hand, the housing price in China is especially in Beijing and Shanghai, those big cities, the housing price is ridiculously high, and people are not happy about this. But on the other hand, you could see that the real estate sector is such a sensitive sector. It's deeply intertwined with the debt market and with financial institutions. And the Chinese government, I think, has learned a very hard lesson in the past 2 years, that if you do not handle carefully, it's going to jeopardize the stability of the entire financial market, which is very dangerous. So I think so. So they have done a lot by injecting liquidity into real estate developers. Now, if that's not going to work, which I mean, if we do not see a rise in the trading volume in real estate, I would expect more active policies. So this time, I think those policies will not be targeted at the financing of the developers, but would rather they will try to remove lots of the restrictions on people buying houses and apartments. So and these restrictions have been there for several years. So I think it's going to be a likely scenario. And then you asked me about this very long run perspective of Chinese economy. So now, first of all, I'm an economist, and as we all know, economists make very lousy predictions. So
of uncertainty.
that's why we okay. So that's why we choose to be academic researchers rather than working in Wall Street, right? Okay, I think in the long run, the Chinese economy needs some very serious structural reforms. So Mr. Ambassador just mentioned the liberalization of our financial sector, and that's part of that. And then also the liberalization and the privatization of our giant state sector. So which has been absorbing lots of scarce financial resources without generating sufficiently promising returns. So I think this is going to be very important if China is going to reignite the successful reforms. And in the even longer term, that depends on human capital and innovation. So I'm less optimistic. I'm less certain about the perspective of structural reform in the next 3 or 5 years. But I'm more optimistic, and I'm very certain. I'm more optimistic on the innovation of the Chinese people. So China is already producing the largest number of STEM graduates every year, and Chinese scientists and Chinese firms are catching up very fast in innovation. So 2 decades ago, if you visit China, if you ask why Chinese firms succeed, you will probably hear answers like, well, because of cheap labor. But then if you look at China's electric vehicles and China's solar energy industry, so you could see that China is catching up very fast in those technology-intensive industries. So I think that's probably the brightest part of Chinese economy in the very long run, and I'm quite optimistic about this. So don't forget that I'm a professor. I have very high confidence in my students.
And STEM is a very important sector, right? A big driver of innovation aside from human capital accumulation.
Yes. So that's probably the ultimate driver of economic growth.
Yeah.
Let me ask you about the currency. We have seen this recently, the RMB depreciating quite considerably. Not different from many other currencies in the world. This is good for trade, but this is a problem for those who borrow in foreign currency. How do you see the future of the exchange rate policies in China? Do you think that the central bank will have a more active reaction to depreciation, or the central bank is generally satisfied with the fact that the currency is depreciated? How do you see this reality?
Okay, so first of all, so soon after, I think possibly as a response to China's removal of the COVID-19 restrictions, we have witnessed some very strong appreciation of RMB in the past week. So it seems that international investors have regained some confidence in China's currency. So if I were China's central banker, if I were the governor of our central bank, I would probably welcome a strong RMB rather than be satisfied with more RMB depreciation. So you are right in saying that a cheaper currency will probably be good for trade, but it's only the value of the currency is only one of the many factors that will affect trade. So if you look at Japan, the Japanese yen has depreciated significantly in the past 3 and 5 years without very large positive effects on the export of Japan. So there are other factors that that will also work will have very strong impacts on trade. But for a country like China, maintain a stable currency is very important in attracting international investment and also in boosting investor confidence. So I think the central bank, as we have seen, the central bank has intervened from time to time when it sees that the depreciation goes too far. So I think this week, our central bankers, they will probably have felt great relief after they saw this appreciation of our currency.
And can you say something about the internationalization of the RMB?
Okay, so in macroeconomic theory, China has been the largest country in terms of export and in terms of trade for several years. So in theory, a country which has engaged actively in international trade will also probably witness internationalization of its currency. Why? Because of the trade and people need your currency. And this is what the Chinese government has been calling for more than 1 decade. But quite surprisingly, you could see that there's very little meaningful progress of that. So I think the Chinese government has been very risk averse in managing issues related to international capital account. If you want a true international currency, you need capital account liberalization. Now, this is something considered very dangerous or something very tricky. So I think everybody knows that China will probably benefit from a country with a true international currency, but nobody knows how to achieve this without causing unnecessary risk. So it's not just an economic issue, but it's a political issue. We need a central banker who has the political courage and wisdom to carry out a job. So yeah.
That's your view. Professor,
that's my view.
The whole world has been discussing the idea of restructuring, reorganization of supply chains, global supply chains. And we see China very much integrated with the other Eastern Asian, East Asian economies, particularly Southeast Asian economies in this regard. Do you think this is a big issue for China? China will have to manage this topic in a political and economic way with a lot of attention. How do you see this? How do you see China's positioning in this whole topic of reorganization of supply chains?
So actually, I think shifting supply chain out of China already took place even before the 2018 trade war. So because of rising cost and especially rising labor cost in China, and many Chinese, even domestic Chinese entrepreneurs, domestic Chinese firms have been relocating some of their production resources towards towards other countries in Southeast Asia and in India and Bangladesh. The COVID-19 and trade war and only accelerated this progress. So I think it's very an easy way, a ready to use tool for the Chinese government to persuade firms to stay in China is to pour in more subsidies, which I don't think is going to work in the very long run, because essentially you are working against economic factors and by pulling fiscal resources to the export sector. And China has been subsidized, in a way, China has been subsidizing American customers by pulling subsidies into our export industry. So the right thing China should do is to boost the domestic confidence and to streamline the regulations and to have a better investment environment. So which will not have immediate effects, but it's going to have more positive effects in the very long run.
Professor, an economy like ours in Brazil receives a lot of Chinese investments.
Yes.
In 2021, we were the largest recipient of Chinese investments in the world. And we pay attention also to the policy of dual circulation that is in China. That has a lot to do with the internal market, with the local reality. How do you see that the policy of dual circulation is going to reduce the appetite for foreign investments by Chinese companies?
Well, actually, I don't think so. So you have to understand the pretext for this dual circulation thing. So I think all this discussion about of this dual circulation thing is to prevent China from depending too much on the US. I think that's the sole aim. That's the sole aim. You can sole aim. But again, as I said, I think we can understand that even powerful governments like China's government cannot work against basic economic principles. So China benefited tremendously from globalization, and there's no way China could turn back.
Yeah.
And I think in the coming decades, we should see more Chinese investment in countries like Brazil. And I think the Chinese government actually would welcome this.
And you also see foreign investments going to China. Economic liberalization is there to stay, isn't it?
Yes. I think Chinese government will continue. Will continue to attract foreign direct investment.
Good.
I'll have one more question in this ending time. I'd like to hear a little bit about environmental policy and energy policy, something that also the countries have taken back in the COVID recovery. And China actually has a very ambitious and strong plan of a peak carbon emission soon, and then reducing emissions alongside with investments in sustainable energy and transitioning to a more renewable energy matrix. How do you see this taking place in the eve of the recovery? Is it going to be an important driver for growth and also an important driver for investments for the Chinese economy?
Oh, yes. And China has been very aggressive in taking those environmental and renewable energy policies. So as I said, China is operating in a more top-down way of forming policy. So it's definitely a two-edged sword. So once you have a very powerful central government top designing environmental policies, you could see that the regional governments and all parts of the Chinese economy reacting very actively to the call of the central government. So this is something unprecedented in China 2 decades ago, when regional governments could have relatively more independent policy making. Yes, but with the reopening of the Chinese economy, so I think the new energy sector and the environmental protection sector is going to continue to have a very heavy investment and produce more profits and opportunities for investors.
Well, we are approaching the end of our debate. Professor Huang Zhangkai, thank you very, very much for your participation and for your very interesting observations about China, and very different from many observations we generally hear about the Chinese economy, but give us a lot of confidence in the future and in the future of liberalization and the future of China's connections with Brazil. Thank you very much. Thank you very much for
thank you, ambassadors. Thank you, Cecilia. It's my great honor and my great pleasure. And I hope we could meet in person soon and with China reopening. And I do hope I could have the opportunity to visit your beautiful country.
Oh, that
Perfect.
would be
that
wonderful.
would be great.
Thank you very much. Goodbye.
Thank you.
For the audience.
Bye-bye. Have a nice day.
Our sponsors, BOCOM BBM Bank, that sponsor the China program. Bye-bye.
Thank you so much, Professor. Bye-bye.